Hey everybody, thank you for being here. A lot of people are probably asking here in the comments is why am I not doing this with the other stuff? Is because, and am I not doing this with keep the content segregated because crypto people sometimes don't like Tesla. Crypto people sometimes don't like macroeconomics. So I'll try to split them out from now so you can just pick and choose whatever you like. But this blew me away. And I want to talk about a couple of things here, everybody. First of all, Barrons. I subscribe to pretty much everything out there. You name it, I have a subscription. But Barrons has a consumer rating of 1.42 stars from about 50 reviews, indicating that most customers are generally dissatisfied with their subscription. And they've been complaining quite frequently about Barrons for quite a long time. And I am also often one to complain about articles written by Fortune and Barrons and you name it. And I think Barrons ranks about 66th amongst all stock research sites. But let's talk a minute about these, what I call Wall Street rags, finance rags. And normally they try to stick a dagger through the heart of this company, Tesla. Let me show you the little graphic I put together with the aid of some AI. I tried to put together tulips and mushrooms with a lightning bolt going through a Tesla. And I called it Teslas in case there's any copyright infringement or something. But this is unique. And it's from AI from IA, whatever. But anyway, the reason is Elon Musk has made his fair share of enemies, bringing truth to the world, which people don't like. But I think it's always very important to listen to all sides, and I'd much rather hear the truth, even if it's an ugly truth, than anything else. And of course, art is fun. But let's talk about the continuum, as I call it, for media, and then we get into the article, which you will be quite impressed with. So this is what I call the press continuum. So here you have, on the top left, good press. Top right, bad press. Then you have your good press that gets overly, like, how do I say? I can't remember the word. Where it puts people on a pedestal too much. They're called puff pieces. And then you got people that just hate stuff and they're hit pieces. Normally, these Wall Street rags write hit pieces in Tesla. But this one was different. And I'm going to walk through it real quick. This will only take a couple of minutes. Because it was extremely well structured and full of really valid points. And I'm glad to see other people doing the type of stuff that I try to say. So this is just too important not to mention. I'll walk through it real fast. So I like mind maps. So this is a mind map. Let's start in the top right corner. Barrons on Tesla. They say a recession could slow Tesla in 2023, but the company is by far the best positioned to fly through tough times. Brilliant. I always called Tesla recession proof. And I'm glad they mentioned that because they are better able to handle what's coming than any other player. Number two, Tesla is the leading EV manufacturer in the world and one that has a decade plus head start over other automakers as well. Okay, hold on a second. This is sounding a bit like a puff piece. A decade plus, I give it 4 to 7 years. A decade plus is a bit of a stretch, but we'll take it. Third, Tesla is able to produce cars at a much lower cost than its competitors, giving it room to cut prices to stoke demand in a way that others can't. Boom! That's exactly what's happening in China. Freaked the market out yesterday morning. Tesla tanked down to 103. It was like, oh my God, and then bounced up $10 right after that. So they can pull those levers that I've been talking about a lot, and they can still make a profit. And the more they pull the levers, the more they drop their prices, the more they crush the competition. And again, as Elon said, there is demand as far as the eye can see. And everywhere around the world, the demand is exploding. Taiwan, Australia, Norway, you name it. Germany even. Number 4, Tesla is expected to generate the most free cash flow among automakers in 2023. In fact, some $12.2 billion in free cash flow. The next biggest player, by the way, might be able to scrape 8 to 10 billion. That's Toyota. Makes the largest number of cars in the world. What's a toss-up between GM and Toyota, depending on the actual day and which subsidiaries they include in the numbers. But that is huge. And people always say, well, it's just a car company. No, it's not. And second of all, it's very profitable. Okay. It's trading at 21 times 12-month forward earnings. Yep, we know that. We've covered that a lot. That is cheap. But what's interesting about that 21 times 12-month forward earnings is Tesla, with their earnings, make it less expensive than Pepsi-Cola, Visa, and Walmart. These are big, old, stodgy, slow-growth companies. And Tesla's cheaper. Again, even Barrons are like saying, what? What's going on here? Numbers like this demonstrate why Tesla, with a market cap around $350 billion, is the world's most valuable car company. Again, tying back to PE, tying back to free cash flow generation, etc., they come to that conclusion. And also, this is kind of cute, it will cut prices to juice sales, and that will hit its margins, but Tesla has tons of margin to spare. Again, they got that 30% to play with. And then they got tax credits. So imagine, hypothetically, you have a $100,000 car, okay? It costs you $70,000 to make. And hypothetically, I'm just using 100 because easy numbers, you get a $7,500 tax credit. They have $37,500 to play with. They can reduce the price to $62,500 and a $100,000 car and still break even. That is the math behind this craziness. Tesla, up top left corner. Actually, let's go top bottom left corner. Operating margins of 18% in 2023. Yep, they're probably going to do better than that. Free cash flow of $12 billion. Yep, more than Toyota. We covered that. Tesla could sacrifice some 10 percentage points of margin and still be as profitable as, say, BMW. I would argue with that. I think BMW is struggling. Their numbers are down and they're not selling as many units. And the pricing pressure is coming too for those guys. And I drove BMWs for 25 years, so I don't want anything bad to happen to them, but the world is changing. In EVs as well, everyone else is losing money, with the exception of BYD in China. Even General Motors, which sells a $110,000 Hummer, has targeted EV profitability by 2025. Okay, lost a truckload of money in 2022. We'll lose even more in 2023. By the way, they only sold 74 cars, EVs, Hummer EVs in Q4. 74. I mean, this is like, that's like one of those trucks that carries cars, like car transport. Anyway, enough of that. They're going to lose money in 2024 and maybe, if they're still alive, maybe break even in 2025. This is what the traditional ICE manufacturers are doing. They are going to suffer tremendously over the next 4 years, 3 years. Then you go to Rivian and Lucid Group. They are far from profitable and don't have the scale to compete. And they may never get to scale. That is the problem, is really scaling this business to make it work. You don't make money churning out 74 cars a quarter or even 500 cars a quarter. You need hundreds of thousands to make it work, and they're all very far from it. The next point, Barrons, this one stunned me, and so did the next one. Tesla is more than just a car company. FSD continues to improve, and drivers have shown a willingness to pay $15,000 for it. That's a product and revenue line that no other automaker has. Yeah, the take rate for FSD is about 12%. Not everybody's buying it. It doesn't really work in Europe, etc., other parts of the world. But they're going to nail it in the US and then roll it out in the rest of the world. It is very tricky to do what they're doing, and it blows me away every single day, and I wouldn't leave home without it. I wouldn't feel comfortable in a car without FSD anywhere in the world. Second to last point, it also has 12 billion non-automotive business based on renewable power generation and battery storage technologies. 3 billion in operating profit a year. I think they've been looking at some of my mega pack spreadsheets, because that should add about $100 to each share price in profit attribution over the next 12 to 18 months at the very least. And people are beginning to talk about it. Gary Black is out there talking about it, many others. So this all goodness. And finally, Tesla, it's on its path to a $3 trillion valuation. And for those who are asking, what does that mean in terms of share price? Well, that's $1,000, pretty much a 10x from here. So with that, I must say, Barrons, great job. Best Tesla article I've read from a mainstream Wall Street rag in a long time. So kudos to you guys. 10-minute video. Thank you all for being here. See you all tomorrow. Bye.